Right, good evening, councillors, ladies and gentlemen. Welcome to this evening's meeting of the Audit and Governance Committee. I'm Councillor Barry Pierpont, the chairman of the committee, and my vice chairman, Councillor Anton Dunny, is to my right. Before we start, may I remind everyone in attendance this evening that the meeting is being streamed live on YouTube, and we have a member of the public, or he's a councillor, be sitting in the public gallery anyway. Our housekeeping rules are as follows. Restroom facilities available for ladies on this floor and halfway down the main stairwell for the gentlemen. In the event of a fire alarm sounding, officers will escort everyone out of the building to the nearest fire safety point in the car park. Will all persons addressing this meeting please do so through the microphone system at all times. This meeting is being recorded. Please be advised that abuse or intimidation of any kind will not be tolerated. Anyone who's deemed to breach this requirement will be warned and asked to refrain. If the behaviour persists, they will be asked to leave the meeting. We'll now move to part one of the agenda, the preliminaries. Can I have apologies for absence, please?
Yes, Chairman, we have apologies from Councillor Savicchiani.
Thank you. Declarations of interest. Declaration of interest in respect of any item on the agenda. Does any member wish to declare any interest of any items on the agenda, please? No? Okay, I'll sign the minutes and confirm the meeting of the last. Sorry, I'll sign and confirm the minutes of the last meeting held on the 18th of March. Do I have the permission to sign the minutes of the last meeting? Thank you. I don't suppose you're having any written questions, do we, at all?
There are none, Chairman.
From the public? Thank you. Right, that concludes the preliminaries. We'll now move to part two of the agenda items. Part two is the draft external audit plan and strategy report. Before we go there, I'm just going to make a quick announcement, if you don't mind, and say that you recall Jo Briggan, who is our independent member. Obviously, she's not with us anymore now because she's now become a non-exec director of the PSP organisation. And also, she's to be appointed the chairman of the new Boston Town Hill Board. So I'd like to put on record, Jo was a great asset to this committee, as you know. She was very thorough, very good, has worked as a non-exec director in different positions throughout her life, and was also very good at questioning people and getting the nitty-gritties. So I'd like to put on record our thanks to Jo. I know she was only with us for just over a year, I think it was, but we really did appreciate her, and we are looking for some more people to join the panel. So I'll move a thank you. Do you all agree with that, folks? Can I just put your, yeah, well done. Thank you very much. And can we move on then now to the external audit plan and strategy report? I'll ask the KPM auditors to take us through it.
Thanks, Chair. So, as you say, this is our indicative external audit strategy and audit plan and memorandum for the financial year ending 31st of March 2024. So it aims to lay out the nature, scope and timing of our planned external audit activities for this financial year, and also provide some mandatory communications that we're required to make to you as those charged with governance in line with audit and standards. I'll take the report as read, but some of the more salient points within the report are obviously our materiality figure that is listed at the beginning of the report, and then a detailed commentary on the significant risks to the financial statements that we have identified through our planning and risk assessment procedures. These are areas of the financial statements where we deem there to be the most significant or greatest possibility of material misstatement within the financial statements, whether due to error or fraud. So in terms of the greatest risks of error to the financial statements, we have the valuation of land and buildings, and we have assessed that as having a significant risk of error due to the estimation uncertainty associated with that valuation. Likewise, with the valuation of the local government pension scheme liabilities due to the estimation uncertainty in terms of the key assumptions that derive that valuation, we have deemed there to be a significant risk of error as well. For both those areas of the accounts within KPMG, we will be using our own valuation specialist to help provide additional assurance over those areas and add extra robust assurance to the audit process. In terms of the risks of fraud associated with the financial statements, audit and standards require all external audits to consider the management override of controls as a significant risk within the financial statements. And that is why you're seeing that within our external audit plan. It is worth noting that we have not identified any heightened risk of management override of control as part of our planning and risk assessment procedures. But that being said, as risk assessment is an iterative process, we will keep that under review throughout the whole course of the audit and obviously update the audit committee if that risk increases in size or possibility. Audit and standards also require us to consider the rebuttable presumption that there is a fraudulent revenue recognition risk within the financial statements. You'll see within our audit plan that we have rebutted that risk across all key revenue streams due to the lack of perceived incentive, opportunity, and/or rationalisation of management. We're also required to consider whether there is a fraudulent expenditure recognition risk within the financial statements, and we have also rebutted that. But as I say, this is an iterative process, and once we begin our detailed work over the financial statements, if our analysis on those risks change, we will let the audit committee know at a future meeting in terms of whether there have been any significant changes to those considerations. As well as our financial statements audit opinion, we're also required to provide a conclusion on your arrangements to secure value for money in terms of your use of resources. We've included our risk assessment to date that we have completed over the three criterion being financial sustainability, governance, and improving economy, efficiency, and effectiveness. To date, we haven't identified any significant risks in your arrangements that would suggest a significant weakness is in place within your arrangements. We've been through this report with management to confirm factual accuracy, and hopefully the detail we've included to date represents a true reflection in terms of your understanding of the operations within the council itself. We have identified 3 performance improvement observations, which management have responded to. One in relation to how reporting of group performance could be improved, as well as the improvements that could be made to the risk management reporting. And then one final performance improvement observation around the formalisation of review of budget monitoring action plans. The rest of the report goes on to provide additional insight into our quality framework, some information on updated auditing standards impacting this financial statements audit, and also confirmation of other key required communications, such as our independence to complete the financial statements audit. Happy to pause there and take any questions on the report.
I'm just going to say one thing to you first. When you go through the report, everybody else does the report, please refer to the page numbers you're talking about so we can follow you better. I mean, there's 2 documents here, James, and obviously people are waffling through all the papers looking for what you're doing. So can we just refer to all the officers? Can you refer to a page number when you're talking about certain aspects of the report? It will help us. Councillor Middleton.
Thank you for your report there. Just a thought, Chairman, if we were to get that report fastened to the back of this, it would make it all mean a lot more. I've spent considerable time going through these papers, and you've just answered quite a few of my queries. So I'm just going to go through my papers again, and I apologise if we repeat. But on page 19, you say that we've identified the risk of fraud by management rewriting the accounts, etc. And you say we've not identified any. So does that mean it's not happening, or it means you haven't found it?
So as part of our planning and risk assessment procedures, we're required to consider if there's any indication that instances of override of control or fraudulent activity exist. So what we're trying to say there is, to date, we haven't identified anything. Auditing standards require us to include it within a report, but
so at the moment you presume we're all clear. Okay,
yeah.
That's fine. So I'll go on to page 20 then, and we talk about the valuation of the retirement benefits. And it talks about, you're not sure what the valuation is, But do we not do any benchmarking against other councils to see how their pension pots are going up or down, or moving with the markets?
Yeah, so within this risk, this is a specific risk related to error in terms of the assumptions that your actuary will use within the valuation of those liabilities. As part of our work, we engage our own KPMG actuary to look at the key assumptions, some of which are laid out in the 4th bullet point there on page 20. What we do as part of that is we assess them within a range in terms of whether they are prudent, optimistic, or neutral. And as part of that, we do consider the assumptions used by other pension funds in order to determine appropriateness. And when we provide our final external audit highlights memorandum, we will have that information to provide that additional assurance to the committee.
And do you feel that we're now moving into surplus then, as you suggest that most of the pensions are at the moment?
Yeah, so the majority of ones that we've seen over the past 2 years have moved into the surplus position. Obviously, the sensitivity of those assumptions that are used do require careful consideration in terms of what effect that has on the surplus or deficit position. So obviously the draft financial statements are within the pack, and as part of our audit, we'll be determining whether the correct applications of the assumptions have led the scheme to be in surplus or deficit. So I suppose what I'll say is it's subject to audit at this stage, but the direction of travel over the past couple of years has been one of a movement to surplus within pension schemes.
Okay, thank you. My next point is on page 41. And we talk about PSPS here, and are we getting value for money, is my question here. How the performance of services is monitored and actions identified in response to areas of poor performance, and the monitoring of outsourced services. So how do we know that we are getting value for money from PSPS as we sit here?
So it's a useful question, and obviously within the report we make reference to an externally funded report in terms of an independent review was done over the services provided by PSPS. From our perspective, we're required to understand the arrangements in place for you to monitor whether value for money is being achieved. So from our point of view, at this stage, we're assured that through the consideration of engaging in independent experts to provide a commentary on those arrangements, that is an appropriate arrangement in place. The fact that within the committee meetings that I've attended, it's constantly a point of consideration and constantly a question that's being asked and assurance being gained on that. From our role as external auditors to understand the arrangements in place to consider and constantly challenge and apply management skepticism over value for money arrangements, those arrangements in place currently we deem to be appropriate. It won't be for us to determine whether we come down yes or no on whether value for money is being achieved. That'll be something for the organisation itself to continue placing rigour on and questioning as you go through.
Okay, here's what I consider to be a fairly simple question, but I asked it to the peers that came to review us, and it was, should we have a customer-supplier relationship with PSPS, or should we just be we shareholders together and let's just roll along? What do you think we should be?
I suppose in my role as external audit, it's important that I remain and obtain independence in terms of those type of decisions. We have to be very careful not to take any what's perceived to be management decisions or management opinions. Obviously, my colleague with an internal audit might be able to do more of a deep dive review in terms of providing some more, I suppose, what we perceive to be better insight than external audit that really deals with historic issues and within the financial year.
Because so these people tell us they've saved us 23.8 million, whatever the number is, something like, over the years that they've existed. How do we know that's correct? What are we saving money against? I'm
going to stop you there for a moment and get Christine to come in there and just sort of give us the answer. Because
I'm asking the wrong questions here.
Well, I think Councillor Middleton, we've got to get Christine to answer it because she's got a finger on the button on this, whereas the auditors don't necessarily go into great detail on that. Christine, I'll let you go into that one. Go on.
So just to give you some assurance, South Holland and East Lindsey commissioned Grant Thornton to do a review of the PSPS arrangement and to test that it was providing value for money. That was done in about 2017, something like that. And on the basis of that, both of those organisations decided to extend the arrangement in that it was providing value for money. So that was quite a detailed report that was undertaken at that point in time. PSPS does itself undertake benchmarking on a regular basis, and I'm sure that's something the company directors look at. And I have recently seen some benchmarking produced by them that shows them favourably comparing to other costs, let's say, by in-house services. The other thing to bear in mind is, and it's quite a sensitive subject, obviously, the majority of the staffing costs within PSPS are not linked to NJC. So whilst they have access, so the savings you are making are through NJC not being applied to those salaries.
Not all to their personnel not within the local government.
They are, but the pay rise is not pegged at NJC.
Okay. So we feel it's pretty good value for money.
I would expect the figures that you've been provided with to have been robustly looked at by their own financial experts.
Thank you.
Can we move on, or have you got any more questions?
If you want me to move on.
Well, I'll come back to you in a moment, but I think I'm going to get Councillor Gleeson jump in first, and then I'll come back to you in a moment, if you don't mind.
Thank you, Chair. Just a couple of things. The first thing, because of the discussion we just had, I need to declare that I'm a director of PSPL Limited. I've worked my way through this report, and again, I'm coming back, I suppose, to one of my old complaints. There is a lot of long words in this. A lot of what feels to me to be standard paragraphs and things that have been pulled in. And what I want is something in English that I can understand, because then I feel I'm in a much better position to know what we're doing and where things are going. I realise the reality, we have to have some of these statements in it because we have to make certain things, but put them in put a nice 2 or 3 pages at the front in English and say, Paul, you need to look at these 2 or 3 things, and I'll do that. But
it takes considerable time.
It does. Well, I've done it, and actually, in truth, I can do it. I'm not saying, but I don't think anybody looking in here, anybody who's downloaded the papers, to watch this meeting, I don't think there's that many sad people in the world, but they might have done. We do need something that people can understand in this. Just a brief bit of what we're trying to achieve, what you want to get at the end of it. So, because people aren't gonna, if we want people to be involved in what we're doing, they're not going to read this. I understand a lot of work. I'm not.
Councillor Gleeson, I tend to agree with you, and we've asked in the past for officers to give us an overview sheet with some bullet points on the sort of key things and page numbers, and look at this because this is the major issues. I don't think we've had that yet. It might start to come after today, because I am getting fed up of looking through 266 pages of stuff trying to digest it all. What I'm going to ask everybody in future, please, can we have an overview sheet, if it's possible, as the committee are asking, with the key bullet points on the front, pointing out where the key issues are, and refer them to the page numbers in the pack in the reports, and then we can read everything else as well, but we want the information that's key to the meetings. And this way will help everybody around this table to understand a little bit more about what we're doing and going through. I'm not asking for miracles. I'm not asking for anything difficult. I just think it'd be good if we could have an overview sheet with those key pointers on. It would be helpful. I haven't got a problem about the packs, because the packs are there with all the full information, but I do think it will help us to just digest a bit of what's going inside all these numbers. Is that okay?
Yeah, and that's really, really useful feedback, and I completely appreciate what you're saying. So I will absolutely make sure that we do have that high-level summary, executive summary, to go along with the papers at the start.
It doesn't just apply to you, it applies to everybody else around this table. So that's very kind of you. Right, from Councillor Gleeson, we're going back to Councillor Cantwell, okay?
Thank you, Chair. I just wanted to ask, on page 18 and 19 of the agenda pack, which is page 6 and 7 of the audit report, it there's a lot of planned responses, and I was just wondering, there's no dates to when these planned responses will be, when the actions will be carried out, and furthermore, they're very vague and they don't say how, or any indication of how. Is that something we can expect from this report, or is that something that could be improved upon?
Yeah, so absolutely. So on page 34 of our report, we have our audit cycle and timetable. So I suppose in terms of the timeline for completion of those activities, it's expected that they would take place when we undertake our final financial statements audit visit, which is actually due to start this month and commence over July, August, and September. The difficulty initially when drafting this report was with the issues with finalisation of audit financial statements, the legislation that was still to pass through Parliament with regards to the historic external audits. It was difficult to, I suppose, provide an exact date and an exact timetable, because normally we would expect a formal timeline to be provided in terms of when we would be expected to sign off the financial statement. So more than happy to, in the future, provide a more detailed timeline in terms of what month we'd expect those procedures to take place, but they will be taking place this month and in August as well. From that point of view, in terms of the procedures themselves, completely appreciate what you're saying. What we've tried to do is we have to use specific audit language. It probably isn't very helpful to members of the committee. So more than happy again to try to demystify some of that word and provide a bit more additional clarity. When we provide our highlights memorandum, we'll provide a lot more detail in terms of what the procedures were to address those specific risks, which will call back to the procedures that you see here, and we'll make sure we add sufficient and appropriate detail in there so you can get the assurance over who we've engaged, when we've engaged, and the results of those procedures as well.
Is that the question's answer for you, Councillor?
Yep, thank you very much.
Right, just going back to the oversheet, I haven't got a problem about the whole pack being presented on everybody's reports. All we want on everybody's reports at the front cover is just some bullet points to just giving us some indication. I don't have a problem having 266 pages to read, not a problem. But what I would like, and so rest for the committee, on each pack report on the front, key things that we need to be reading. Are you happy with that?
Absolutely.
Let me just go back to Councillor Middleton. He's got a couple of more questions to ask.
Sorry about that. It's a very quick one, and Christine actually answered it. I was going to ask, the PSPS go through the same audit procedure, and you also already answered that Grant Thornton do it for them. So thank you very much.
Can you just clarify on that point? Grant Thornton did a review in 2017, but in terms of auditors, they have their own external auditors as well. I'm not sure who they are at the moment. Duncan and Topless.
Okay. Any more questions before we move on? Just one question from me to you, Christine, and anybody else around the table here. Are you happy with what the auditors have supplied regarding the recommendations and all the information they've supplied? Is there any questions on that you'd like to raise or go through with us that you're not happy about or whatever?
There's nothing there that surprises me. PPE and pensions have been an area of focus now for some years by auditors because of the scale and scope of those particular figures. So what I have expected is there.
Can I thank you, James, for that report? That's very kind of you, and I do appreciate it. And I did read it all, and I understand the language you have to use. I understand the formatting and all that sort of thing. Not a problem. It's just that little front sheet we're talking about. And I appreciate what you've done. Thank you very much. Right, we'll move on. So we'll go on to the next item, which is the internal audit report and the opinions of 2023-24. Is that Matthew to report?
It is.
Thank you.
Yep. Thank you, Chair. Good evening, everybody. Starting on page 59 of your packs, this is one of the key statutory reports that we do for you. So this is the look back at the annual audit year 23-24. So all of this information has already come through to you in the committee. This is part of what we have to do. This is us summarising and giving our professional annual opinion for the year 23-24. So if I can take everybody to page 63. That's where we set the definitions of how we, the opinion that we give basically. And what we've given for 23-24 is an adequate assurance opinion across your risk, control and governance framework. And if you look under it's the second definition down in the box there, adequate assurance, and it lists how we come to that. And that perfectly relates to the work that we did for Boston last year. So you'll see there's some medium risks, some medium risk related weaknesses identified in individual audit assignments. There's been isolated high rated risks, which have come to this committee and we've spoken about. There were no critical rated risks last year, and internal audit is broadly satisfied with management's approach to resolving identified issues. And I think actually I would like to say that where we did have those issues that were identified last year with the P card and the bank rec, and it does say later on in the report as well, I think the reaction that we got from officers and from this committee was exactly right. People were very proactive about dealing with that. It certainly gave internal audit a lot of confidence that although those issues came out in our audit work, and we don't want to see that, the reaction across the board, across PSPS, across officers, across the audit committee to address that, I think went really well and gave a lot of assurance and fed into that opinion that we give. So just carrying down onto page 65. That's just a very simple, but I think hopefully easy pie chart for you all to see. So the two areas of green are where we've given positive levels of assurance. The very pale yellow is consultancy work that we've done. And you can see together, all of that adds up to sort of the low 80% of basically giving you a positive level of assurance. And there you'll see the red and the amber are basically the two audits, which were the P card and the payroll reconciliation follow-up. And then pages 66 to 68 just give our audit summary around governance, risk management and control. I think if I could just, on page 66, the second paragraph down, there's a paragraph in bold there for members of the committee. I think that that's the one thing we wanted to draw to your attention, that your annual governance statement can be a really useful document for this committee in understanding how the council matches good governance. And that's a really useful report. And I think what we're saying there is if that could get some increased priority and if that could come to the committee, that would be really useful for committee understanding overall governance. So that's what we're recommending there. I think just finally, Chair, page 71 is our performance stats. So again, in terms of confidence or assurance for the members of this committee, you can very clearly see whether your internal audit is delivering your plan and hitting the KPIs that we've agreed, or whether we're not. And that performance management just shows you that between us and the officers, we had a good year. We delivered 95% of the plan by the end of March. That's really unheard of, to be honest. Normally internal audits carry on into the following year. And that's due to the fact that we had some fantastic engagement from officers across the council and PSPS, of course, in getting all of that work done. And I'll leave it there, Chair. I'm happy to take any questions. Thank you.
Thank you, Matthew. That was very thorough and read the report with interest. Any questions? Councillor Cantwell.
Yeah, I just wanted to ask on page 69 of the agenda pack, so page 11 of this report, under anti-fraud and anti-corruption, you mentioned that the audit team led in the creation of initial fraud risk registers. Now, I recognise it's on the next report as well, but would you consider these registers to be more of a strategic nature or operational?
My colleague Suzanne might want to comment on that as well, but I would say they're quite detailed and operational. So we're getting down into some key areas that the council covers and really getting into the detail around how those frauds might occur, what controls are in place, and what mitigating actions we might need to just mitigate those. But I don't know if Suzanne wants to come in as well on that.
I will pick that up on the next item, but yes, I would agree with Matthew about that. Yeah.
Answer the question? Happy with that? Okay, just a quick one from me. Matthew, you talked about the P cards and the payroll. Is there any progress on where we are with that from the problems we've had, or is there any dates when we're going to be doing a second review or anything like that? Because we heard the first time around all the problems and issues, and obviously I was expecting an instant sort of go down the road and do it all again, but you said no, it doesn't work like that. So obviously, where are we now regarding progress and development and, you know, going through the sort of follow-up?
Yeah, I mean, I'm sure officers can give you an update on where they are with that actual process of P cards. In terms of the audit, we're just in the process now of agreeing to do that work. So that work should start over the next couple of weeks. So the follow-up for P cards is just about to start. And I think the payroll will likely be Q3, I think. So they're both happening. That's quick, I think, and right, but they are both in progress and being scheduled.
That's good to hear. Christine.
All of the actions from the P card audit have been implemented. The new system is pretty good, robust, and I'm looking forward to seeing the results from the audit.
So we all are as well. Any more questions for Matthew's report? No? Right, Matthew, thank you very much. And we'll move on. Let's go on to the next one, which is it the Q4 risk report? Suzanne? Or is it Suzanne or is it John? Is it you, Suzanne? I take it. Over to you. So I've got John's name on the side. I think. Go on.
Thank you.
But Suzanne's going to present it. I didn't read down the line. Sorry, beg your pardon.
No, that's okay. Yeah, this is on page 73 of your packs, item 3. This is the risk update as at the end of March 2024. Over on page 74, you'll see there's a table set out there at paragraph 2.2. That sets out the changes that have happened since the last report. So there have been a few updates to the controls for cyber incidents, technology infrastructure failure and internal communications. That hasn't impacted on the risk score overall, but it just gives you a bit more additional context and information. And the capacity risk has had an updated planned action in the last quarter. And there are 3 new risks which have been identified around business continuity, health and safety and information. The matrix over the page on page 75 just gives us that overview of what the risks look like, the spread of the risk, and it helps us to check that those look reasonable, that there aren't any outliers that you wouldn't expect to see. Then below that at 2.3, we've got the strategic risks to the partnership. So the main risk register is around risk to the council, and then the partnership risks are things that could impact on the partnership itself. At paragraph 2.4, which is over the page on page 76, we have at the top there the high operational risks. So what we've done there is just get confirmation that those high operational risks are being reviewed. We don't put too much detail in at this stage because there is a line between risk management and assurance. So this gives you assurance in your role as audit committee members that the risk process that is in place is being followed. It's not your role to manage the individual risks, otherwise that can blur the lines and make it harder for you to hold the right people accountable. But this does give you that assurance that mitigation and monitoring is in place for those high operational risks. And then just below that at paragraph 2.5 are the fraud risks that we talked about earlier, recently identified and reviewed in Q4 with assistance from internal audit colleagues. We're very grateful for that assistance. So fraud risk is now part of our regular quarterly monitoring and reporting going forward. There'll be more work on that to follow in 24-25. So we are currently updating the Q1 risks to the end of June. That's just opened up for data collection now. And we've asked the risk leads to review their action wording in particular and to look at dates for the actions. So that's something I know the committee was keen to have and the auditors have raised as well as a recommendation. So at the moment, the risk leads are looking at their Q1 risks and adding that detail in. So if you have any questions, I'd be happy to take those.
I'd like to just start the ball rolling with a question. You said you identified 3 new risks. How do they come about?
So they are reviewed by all the ADs every quarter and managers, so they might identify them in different ways. The two that we identified for business continuity and health and safety were in other parts of the partnership, so they were identified in there, and we've brought those across because they're relevant to Boston as well. And then the information one has come forward from the data protection officer as a particular risk that's coming at the moment. So there's lots of different ways that we can identify risks, and that's why we review them every quarter. So if there's something new and emerging, we pick that up.
And who is monitoring the risks on an ongoing basis? Is it you? Do you go around to all the different departments and discuss all this? I mean, it all looks very good and very informative, but I'm just keen to know how we're monitoring all these things and what we're monitoring it against. You know, have we got something to monitor it against? Or tell me how it works.
Yeah. So at the end of each quarter, so at the beginning of this week or last week, we send the email round to all of the assistant directors and the managers to ask them to review their current risks. If they want more assistance with that, we go to team meetings and we talk it through. At the end of each year, we all sit down and look at those risks together with the ADs and their particular managers. At the end of each quarter, we have a corporate governance clinic, which is the officers get together and review what the risks look like at the end of that quarter. They can challenge each other and raise items that are across more than one area. And then that goes to SLT, to senior leadership team, before it then comes forward to yourself. So there's a lot of opportunities to review and look at what's being done. You've also got your committee report. So there's an element in every committee report that has a risk impact that's identified. So if that's in there, that will feed through into the risk registers.
So we're asking the ADs to be honest and above board and make sure that they're recording everything. And then we're letting them do the actual risk assessment themselves. Is that what we're saying?
The managers will start that process and the ADs will review that and add to that. And then SLT will have a look at that and again, challenge and constructively challenge that.
So it's going through about 2 or 3 tiers of checking, monitoring and box ticking.
Yeah.
Okay. Gilbert.
Yeah, we have a number of what you might call levelling up projects ongoing at the moment in Boston, drawing down quite a considerable amount of money from central government. Do those projects, and I'm thinking specifically of the P21 project, but more broadly all of them, are they reflected in this in terms of risk specifically, or broadly does it fall under things like assets or something of that sort?
They have their individual project risk registers, so they monitor that at the level below, like on a line with the operational risk.
Do we have sight of that?
We can feed that up. So what we've done, particularly with the Q4, was to ask the ADs to identify any high operational risks or ones of particular importance to bring those forward. So I can make sure that we include any project risks in that request going forward, so that you get to see those. Yeah.
Thank you.
Councillor Cantwell.
Yeah, I just wanted to add, I'm very happy to see that the high operational risks have been added, and that's something I wanted to see. So yeah, thank you very much for that. And I think adding the fraud risks register as well is good. And I hope that continues on for any future reporting. I just thought these tables, we've got the 4 T's. So, well, tolerate and stuff like that. I was just wondering, for members of the public, if they look at that and they see we're tolerating, I saw on one of these, it's disagreements between senior staff and councillors. Could we just elaborate a bit more on what tolerate means, just so a member of the public wouldn't get confused and think we're all just putting up with each other?
Yes, thank you. Yes, I should put more detail in, and I've noticed that in the performance report as well. I forget to put more detail and explanation in there, so I will pick that up. Thank you.
I think it's important, because if we're not careful, people think they're throwing things at each other all the time, sitting at these meetings and everything else as well. Anybody else want to raise any questions? Do you want to raise a question?
Yeah, if there's no one.
Yeah, fire away, fire away.
Thank you, Mr. Chairman. I'm just looking at the risk to local businesses. How do you measure that? I just would like to know, how do you measure the risk for local businesses?
So it's not my area of expertise, but I can tell you how this one came
Yeah.
about. So we looked at the impact of the risk on the council and how the council can support businesses. And so it's the lead officer who then looks at what is the likelihood of that risk occurring, and then what is the impact of that. It's not so much against businesses themselves, it's more the impact on the council of what happens to businesses. But if you would like more information about the background to that, I can ask the lead officer for some of it.
Yes, if I may
Yeah.
come back, Mr. Chairman. Yes, because just the risk here is, I think, is in yellow, which is medium risk.
Yeah.
But if you look at the reality of businesses in town, we have lost probably more than 7 businesses for the last probably a year. Also, there is another business with WH Smith, which is opting to close in December. However, if the post office found another place, they may close earlier. Then there is Heinz, I think, which is probably they are thinking about the same thing, because some of their shops are closed somewhere else. So, and then we have probably Boots. If you have heard, there is a lot of closures of Boots around the country. So I think it's a high risk. I'll put it probably in red, if according to me.
Yeah. I'll refer it back to the lead officer. It is the difference between the risks to the businesses in the local area and the risk to the council of that particular element. So I will feed that back, and I'll ask for some more information for you
Please,
to give
thank
the
you.
background on that. It's different to what we actually do to support businesses. That's not the same.
If I may, Mr. Chairman,
sure.
it's just because if you look at it from the point of view of the council, it looks very good. We're doing very good. We have the lovely NAPS grants here and there. So we have funds and we're moving around. However, the reality of it is completely different, because I think the council, they have to be on the other side to see what's going on in town, instead of working just of what we have and what we get and what we receive. It makes it, probably all glory to us, but on the outside, it's not. Thank you.
I think all the businesses closing down is a risk to the council on loss of rates, I should imagine. So that's something we ought to be monitoring very carefully.
Yeah, I think you probably confirmed it there, Chairman, actually. The risk register is the risk register to the council, not the community.
Yes.
So I know those two things collide and come together because of the role that the council plays, but this is the strategic risk register to Boston Borough Council. Thank you.
Christine, anything from you?
Just to add, because people perhaps misunderstand the business rate system sometimes, a lot of businesses get small business rate relief. So actually you may assume that there's a loss of income when actually there's not, and that is fully funded by the government. So small business rate relief, rural rate relief, and other rate reliefs have been a continuing factor post-COVID, where some of those have been continued. So the other thing just to bear in mind as well is if whilst it may be a vacant property, after a period of time, the landlord then has to pay the rates.
Good. Right. Anybody else? No. Suzanne, thank you very much for your report. That's very kind of you. And you can pop off. Thank you. Right. So we just take that report as noted, everybody? Everybody happy with that? Lovely. We'll move on. Let's go on to the Audit and Governance Committee Self-Assessment Action Plan. And I think Rebecca's on my TV screen, isn't she? Oh, is it Rebecca? Oh, is it you? I beg your pardon. I got the wrong person.
Item 4, Chairman, annual government statement, action plan update.
I've jumped a number. I must get my glasses checked out.
89. Wonderful. So this is just introducing to the committee where we are on our AGS. There were some key actions outstanding. You'll notice it was mentioned earlier, we ought to be doing this update more regularly, and this is part of that reporting. So in terms of financial capacity and capability, there was a review undertaken by SIPFA last year for PSPS, and I'm pleased to say that significant progress has been made since that time in terms of resourcing skills and expertise within the finance service. All of the quarterly reports are being achieved now to required timescales, and the statement of accounts has been completed in accordance with statutory requirements. That's very pleasing in terms of that progress. In terms of significant governance issues, myself and the Chief Executive, Head of Paid Service and the Monitoring Officer attend a monthly SLT purely looking at governance. So we review, and Matthew attends as well, where we review any governance issues, and that is quite a wide-ranging agenda where we cover significant topical issues in this area. And finally, in terms of housing benefits, we had some issues in housing benefits. They are in the process of being resolved, so I am expecting reviews of housing benefit performance and the audit side certainly to be in a better shape moving forward from where it was previously. So good progress all round.
Thank you. I apologise. I can't find my item 4. That's why I jumped one. Sorry about that. I've got it now anyway. So it's like, apologies, Christine, for that. I've jumped to the thing and I couldn't find my item 4. Right. Noted what Christine said. Any questions?
Just a quick one. The governance SLT meetings, are they attended by both our external and internal auditors, or is it just Matthew?
Internal auditors.
Okay. Was there a reason our external auditors aren't invited?
I'm not sure they'd want to attend a meeting every month and have the capacity to do so, but certainly if they wish to do so, they'd be more than welcome.
Any other questions for Christine? No. Noted. We'll move on. Thank you. Right. We go now. Now, Rebecca, it's your turn. Are you with us?
I am, yes, thank you, Chairman.
Over to you.
Thank you. So as you said, I'm here to discuss the report. Really, it's your report as a committee. It was evaluating the impact and effectiveness of the Audit and Governance Committee. It starts at page 91. The recommendation, which is also on page 91, is that the committee reviews the self-assessment plan and agrees to work towards the actions during 24-25. So the purpose of the self-assessment action plan, which you can find on page 95, is to support the committee in ensuring continuous effective audit and governance practice for the committee and across the council. The self-assessment was undertaken following SIP for best practice that the committee should evaluate its impact and identify areas for improvement. And you can find reference to that at Appendix C on page 105. So specific responsibilities for you as a committee include maintenance of governance, risk and control arrangements, financial and governance reporting, and establishing appropriate and effective arrangements for audit and assurance. As you all know, the self-assessment session consisted primarily of an anonymous questionnaire, and it was designed for you as members to reflect on your operation openly, honestly, and to review and feedback. The results of the questionnaire can be found at Appendix B, which starts at page 97. Those results were then used by the committee to draw conclusions on your effectiveness, and the discussions that followed led to the creation of the action plan. As we said, that starts at page 95. And that's designed to help you as a committee focus on any areas of improvement and ensure oversight of governance and audit issues at committee meetings. And that's
Rebecca?
That is it. Sorry, yes, end.
Oh, thank you. I'm sorry, I can't see you because I've got my back to you. So
yeah, a slight disadvantage.
It's just for you. Anyway, so I want to say first of all, thank you for what you've done, and I'd like to thank all the committee members for taking part in this. I just think on number item on sort of page 98, the 4 and 5 bit, I looked at that bit there, and I think it's all down to skills and training and knowledge. And first of all, I've got to say that we're a new committee, just over a year old, and I think that there was a lot to learn, a lot to take in, and a lot to digest in this particular committee role. I think for the outcome of the results, I think it's very reassuring and very, I think, pleased to see that we are on the right track. I think for a new committee working together, I think, we really are working very well. And I think we've got a good understanding of what's going on. I just feel that there's need for more training, I think, ongoing to do with all the different aspects of the Audit and Governance Committee work. So that's my personal view. But I think once we've got more training and once we've been together another year, I think the impact will be a lot different on this self-assessment. So I think for the first time, I think we've done really well. Would you agree with that, Rebecca, or what?
Yes, I think so. It, like you say, you're quite a new committee, new members to the council as well as to this role, and it's a really good starting point. And it was good that you could all be so honest, I think, and just sort of reflect on what your strengths are and where you need to kind of work at it a little bit more. And that's reflected in your action plan. Really, the sort of the things that you wanted to sort of work on a little bit more.
Yeah, we are going to work on the action plan as well. Thank you very much. Are there any questions from the committee members for Rebecca regarding this report, please? So can we take it as everybody's happy with the report and noted, and we can move on? Rebecca, have a nice holiday and I'll catch up with you soon. All right.
Yeah, thank you very much. Thank you.
Yeah, bye-bye. Thank you.
Bye-bye.
Right, we'll move on then. So from that to item 6.
Annual treasury.
If I can get my papers right. Annual treasury report. That's down to Sean. Is that over to you, Sean?
Yes, thank you very much, Chair. You have before you on page 107 the overarching report in relation to the annual treasury report 2023-24, which details the council's activities and actual prudential and treasury indicators for the financial year. The report is subject to change if changes are made during the year-end audit of the financial statements, as quite a few of the numbers that come out of this report are reflected in those financial statements. I propose to go to the appendix, which starts on page 114. During 2023-24, the following reports have been submitted to the council. The annual treasury strategy in advance of the financial year, which went to council at the 6th of March 2023. A mid-year treasury update report came to audit and governance on the 20th of November 2023 and followed to council on the 15th of January 2024. And the annual review following the end of the financial year, which is this report today. In addition to these reports, you've also received quarterly treasury reports on the 25th of September 2023 and the 18th of March 2024, which were received by the Audit and Governance Committee. Paragraph 2 refers to the council's capital expenditure and financing of that capital expenditure during the financial year. And the table on the top of page 115 shows that the actual capital expenditure was £5,939,000. Financed in the year of that was £4,160,000, giving unfinanced capital expenditure for the financial year of £1,779,000. Further details of that capital expenditure and the financing of that capital expenditure is provided Appendix A1 on page 131 and 132. That provides all the detail. Paragraph 3 refers to the council's overall borrowing need. This is the capital expenditure that is incurred, which hasn't been financed from reserve balances, grants, etc. The table on top of page 116 shows that the estimate for the financial year was that the total capital financing requirement was going to be 21,172,000, and the outturn came out at 18,405,000. That's all your historic capital expenditure and current year's financial expenditure that remains unpaid from reserve balances, grants, etc. So still to be financed. And then the table on the middle of that page shows that the council should ensure that its gross external borrowing does not, except in the short term, exceed the total of capital financing requirement. So you'll see following the debt redemption that happened during the year, actual borrowing at the end of the financial year was £1 million. Your financing requirement was 18,405,000. So your external borrowing is considerably below the capital financing requirement. The table on top of page 117 refers to the prudential indicator around actual financing costs as a proportion of net revenue stream, and it gives some of the other prudential indicators. You'll see you've got authorised limit for borrowing of £28 million. Maximum gross borrowing position in the year was £16.4 million, and you have an operational boundary of £25 million. The average gross borrowing position throughout the year was £9.1 million. And the indicator for financing cost as a proportion of net revenue stream came out at minus 23.46%. That's a minus figure because you have an overall investment income rather than investment payments, interest payments. Paragraph 4 refers to your treasury position at the end of the financial year, and you'll see the column headed 31st of March 2024 shows that you had external borrowing of £1 million, a capital financing requirement of £18.4 million. So you were under borrowed and utilising your council's cash balances, reserve balances, etc., to the tune of £17.4 million. Total investments at the end of the financial year was just under £45 million. And I just would like to point out, to correct an error on this report, the net investments column should have a figure there in brackets of 43,495,000, and it hasn't been amended from the previous year. So if it could be noted that that balance should state that. Yeah, bottom of page 117, the column for the 31st of March 2024 net investments should read 43,495,000. On page 118, you have various splits of that investment, of those council's investments. So the first table, you'll see a split that shows the types of investments that the council held. The second split shows the split between treasury investments and non-treasury investments. And then the final table at the bottom of page 118 shows the split based on maturity structure. So on that basis, you've just got just over £15 million longer than a year, which is your property fund investments, and under 1 year, £29.366 million. And final table on top of page 119 shows the split between fixed rate investments and variable rate investments. So fixed rate, 53% of the portfolio, variable rate, 47% of the portfolio. Paragraph 5 refers to the council's strategy for 2023-24 and a commentary that has been provided by Link Group. You'll see the chart there that refers to the investment rates that have been available in the market. And investment rates picked up throughout the first half of the current financial year, 23-24, as central banks, including the Bank of England, started to increase their interest rates as a result of inflationary pressures. So starting at April, it was 4.25% bank rate, and then it moved up in steps of 0.25 and 0.5, reaching 5.25% by August, and that is where it still remains. Likely indication is that the next step for interest rates is on a downward trajectory. Paragraph 5.2 on page 120 refers to the council's borrowing strategy and the control of interest risk. During the 23-24 financial year, the council maintained an underborrowed position, which means that capital borrowing need was not fully funded with loan debt, as cash supporting the council reserve balances and cash flow was used as an interim measure. This was obviously prudent because the cost of borrowing was higher than the actual returns that you would have been able to have made on investing those funds. Paragraph 6 shows your borrowing outturn. This is page 123. The council at the end of the financial year has a £1 million loan from State Street nominees at a rate of 11.125%, which matures in 2061. Interest on this loan for the year was £111,250. In relation to rescheduling during the year, the council redeemed its borrowing of £15.449 million with the PBLB at a discount of £6.417 million, leaving the overall borrowing position, as previously stated, of £1 million. Paragraph 7 refers to the investments outturn. Investment activity during the year conformed to the approved Treasury strategy, and the council had no liquidity issues. Council's core cash balances, cash resources, are shown in the table on page 123, and they have increased from £22.5 million at the 31st of March 23 to 31st of March 24 balance of £31.7 million. And you'll see there the 5 headings shows the revised split. The council held an average investment balance during the year of £30.3 million on treasury investments and achieved an average rate of 5.2% compared with the average 3-month sterling overnight rate, which we used for the benchmark, of 5.12%. In addition to that, the council has the non-treasury investment balances of £17.7 million at cost, which were externally managed, and these achieved a return of 4.13%. Therefore, that gave a combined rate of return on all the investments, which averaged 4.81%. I think the main table to take from this report is now shown on page 124, which shows all the types of investments and various headings, annual budget, the outturn position, and the variance for the financial year. So you'll see the treasury investment income achieved additional income of 756,000 ahead of budget. Property fund distributions was 88,000 above budget. You had the M&G Property Fund liquidation distributions, which were received. As you'll be aware, the M&G Property Fund is being liquidated, assets are being sold, and the council is receiving funds which it has invested in that property fund as and when those property sales are achieved. So we received £551,465 return on that. And in addition to that, obviously the council redeemed its borrowing, therefore its investment balances were lower than were originally budgeted. But to take account of that, there was the benefit of the discount received, and that has to be allocated over a 10-year period. So 2023-24 receives a benefit of 641,743 against a budget of 0. And because we redeemed the borrowing, or majority of the borrowing costs reduced, giving a saving of £182,253. So overall, the annual budget for the net position was a budget of £968,360, an outturn of £3,188,576, giving an overall variance to the benefit of £2,220,216. Further information in relation to the council's property funds can be seen in paragraph 9.2, which I will refer to very shortly. Paragraph 8 shows the economy and interest rate commentary, which has been provided by a link group. Again, that is quite detailed, and I don't propose to go through that unless you have any questions, which I can take at the end. So paragraph 9.2 on page 127 gives a breakdown of the property fund investments that the council purchased at cost. That has been reduced by the amount of money received in relation to the M&G liquidation process. So book cost of £17.326 million. And the landscape page on page 128 provides a current summary of the financial position of those funds as at the end of the financial year. So you have your purchase cost of £17.3 million and net revenue received during the year of £732,092. The net asset value of the funds in total come to just over £15 million. So that gives a overall reduction in value at the end of the financial year based on purchase cost and net asset value of just over £2.3 million. And the column that refers to annual capital gain loss, you'll see there that shows the reduction in value during the 23-24 financial year of £822,656. That gives a overall reduction, as previously stated, of £2,320,000 at the moment. The M&G Property Fund receipts that the council has received have been used to, because the capital expenditure has been unfinanced when the original decision was made to purchase them. At some point in time, the council has to finance this capital expenditure. So what is happening is as and when the M&G Property Fund receipts are received, it is being used to effectively finance the minimum financing requirement, the minimum revenue provision that the council has to make. A cumulative minimum revenue provision of £215,000 has also been paid in respect of the other council's property fund assets, which are shown in that table. And then you will see the table on page 129 that shows an overall summary of the net receipts that the council has received on the property funds. So prior to the current financial year, 23-24, we had received a net position of £1.67 million as a benefit to revenue. We budgeted for £261,611 in net position in 23-24, and that came out at £531,955, giving a total net distribution of £2,206,313 since purchase. You'll see in the paragraph 1 from the bottom, another error that I wish to point out. It does state on there that the cumulative net distribution since purchase has now increased to £12,206,313. I wish it had, but unfortunately it is only £2,206,313. So the one on that figure does need deleting. Just to point out that statutory guidance in relation to minimum revenue provision on unfinanced capital expenditure has recently changed and is coming into effect from the 1st of April 2025. This will affect how the council treats its unfinanced capital expenditure on property funds, and there will be a report coming to this committee in relation to the property fund investments and the implications of the MRP changes. That is likely to come to the next meeting of the Audit and Governance Committee. That concludes my report. The recommendation is that Audit and Governance scrutinise the annual Treasury report and make any recommendations or comments to Council when they consider this document for approval on the 16th of September 2024. I'm happy to take any questions. Thank you.
Thank you, Sean. As usual, very thorough, very detailed, and very informative. Thank you very much. Are there any questions from anybody on the committee? I'd like to ask a question. You talk about the M&G fund being liquidated, and when's that actually? What date is that going to happen, or has it already happened?
Yes, it's already happening. What they are doing is they are actively trying to sell those assets. They've sold quite a large number of those assets, a significant share of their portfolio. And as you will see from that landscape table on page 128, where we had originally had a book cost of £4 million, that is now down to £336,000. So the majority of those assets have been sold, and as and when they complete the final sales of the remaining assets, we will receive final.
It's just an ongoing process, then, is that what it is?
It is, yes, and they're expecting the finalisation to be in the next financial year, 25-26, when all the final mopping up is completed.
Lovely. Thank you very much. Are there any questions from the committee? Councillor Cantwell.
Yeah, I was just hoping you could go into a bit of detail about on page 116, the table at the top. I was hoping you could just explain a bit more why there's such a difference between the unfinanced capital expenditure estimate and actual.
Yes, the 31st of March 2023 actual is obviously the figures that were included in the financial statements, the audited financial statements for financial year ending in 2023. The 31st of March 2024 estimate was based at a time prior to the end of the financial year when the budgets were produced. So what happened was at that time we estimated that the opening capital financing requirement was going to be 20,243,000, but as you can see, it ended up at 17,211, and that is because we received those M&G receipts. We received quite a large receipt towards the last final quarter of the financial year, which obviously was used to reduce the CFR, capital financing requirement. So the actual, as you'll see in the final column, where we estimated that in January to March of last year, we estimated the opening balance was going to be £20.2 million. It actually came out at 17.211. So that's one of the reasons for the shortfall. And also you will see the actual minimum revenue provision during the current year of 585 when the estimate was 30. That's because we received additional M&G receipts as well, which was also used to reduce the council's borrowing requirement effectively.
Thank you. So it's all down to M&G then?
Mainly M&G, but you do also have the additional unfinanced capital expenditure of just under £2 million, which has been added to the council's capital financing requirement.
Anything else, Councillor Cantwell? No? Christine, over to you.
Just to add, obviously, if we go through as we plan to the process of divesting yourselves of the property funds, that will significantly reduce, because as those proceeds come in, they'll go in against that CFR. So exactly the same will happen again. So this will be an ongoing trend over the next few years, that CFR coming down.
Thank you, and noted. Councillor Woodliff.
So isn't it time to divest ourselves? Given that.
Sean, over to you.
Yeah, obviously the reason why the property funds were purchased was as a result of a decision made at the council quite a few years ago. At that time, interest rates were extremely low, and the returns that the council has received on those property funds would have been significantly lower on those funds if they would have been invested in the market. They would have been invested at rates around 0.1%. So there was a significant gain at that time. As you have just stated, yes, the property prices, property funds as a result of COVID and market conditions have hit an all-time low. They have bottomed out certainly over the last quarter, based on the figures that we've received. They have started to plateau out and in fact have just started to see a gradual increase, but I anticipate that is likely to be a slow process, and it will pick up once interest rates start to reduce, and therefore the cost of borrowing ends up being cheaper. Therefore, the property market is likely to move again. The business case around the investments of property funds obviously has now changed as a result of the MRP guidance that has changed, and I believe the Section 151 officer is going to be raising this issue and looking at this decision as to whether it still needs to be carried out as it is at the moment, or whether alternative arrangements need to be made. But I'm sure whatever is considered, you are likely to receive a report before the committee.
Just before you do, I'm going to get Christine to pop in first because she might want to continue off where Sean left off. Thank you.
So obviously when you took these property funds out, it was at a point where, as Sean said, the interest rates were incredibly low. So you were achieving significantly above that which the market could achieve for a considerable period of time. Obviously then COVID hit, and the war in Ukraine, and also some other significant financial events, all of which resulted in interest rates increasing. And when that happens, they are of less value and obviously impacted upon as a result of that. From my perspective, I would not wish to divest of them at a capital loss, would wanting them to break even. So you'll take the investment income alternative yield that you've obviously had over that period of time. When you purchase them, you never intended to have them as a short-term fix. You intended to have them as a long-term hold. So we need to manage through that process, and that's what not to predetermine what any such report will say, but it will look at the options for effectively what the future might look like in terms of those property funds. So you did very well on them for a period of time. Their time has now come. MRP is impacting, and we need to look at the way forward.
Thank you. Go back to Councillor Woodliff in a moment, followed then by Councillor Gleeson. Councillor Woodliff, over to you. Right, I'll let Christine come back in again just to finish off, then we'll go to Councillor Gleeson. Thank you.
You've got to remember you've just had one liquidated and it's coming in at value. So with M&G is being liquidated, it is almost fully liquidated. On the basis of the valuations we have, you will get all of your money back. So what we need to bear in mind is you have a value of a fund, which is like everything's at the vagaries of what people think it's worth, but you've got underlying assets. And if those underlying assets were released to the market in a measured way, they would, certainly do well, as is M&G. You need to look at what those underlying assets are. They are residential, they are retail, they are a commercial stock, and the people managing these funds are very capable and competent in the management of those funds. But what's happened is interest rates have outstripped them, so therefore the money has moved elsewhere. As interest rates start to come down, these forms of investments become more attractive and their value goes up. It's no different from any other form of similar investment, but the advantage with these is they're sat on investment, real physical investments in terms of the assets. And I think M&G's liquidation is a fascinating illustration of hopefully what we'll see when we start to move forward to exiting these.
Has that answered the question for you, Councillor? Has that answered the question for you? Well, if you did, I'll come back to you later. Councillor Gleeson.
Thank you, Chair. Now, look, the Tories had this rather cunning plan, which was they would lend us money cheap and we would take on the risk, and we bought property with it. Now, as it turned out, they actually did us a favour, which I accept is unusual for a Tory government. We borrowed 15 odd million pounds, and we bought property that was worth at its height about 17 million. But thanks to the cleverness of our officers, we paid off that debt for about 8 million. So we are sitting with, at the moment, 15 million pounds of asset, which we actually bought for just over 8 million pounds. We are still seeing annual income from it. Okay, maybe not as good as we would have got, or we could get now, by investing in banks and things. But you know, this is a blip due to COVID and Ukraine. So in the fullness of time, these investments will start returning more than we can mostly get from the banks. And at some stage in the very near future, as shown by the MG liquidation, we can be able to get our money back by selling off anyway. So in truth, we've actually made money out of this, and we're benefiting from that income. So it ended up not being a bad story, even though that wasn't the Tories' intention.
Very well put, Councillor Gleeson. I think that's very well put. Thank you. Any questions for Sean before we move on? Any more questions? We had a good hearing on that one, so we can move on. Should we take it as noted then on that report from Sean? Everybody happy? Yes. Good. We'll move on. So now we're on item 7. It's the unaudited financial statement. Is that Nicole going to present for us? Over to you, Nicole.
Thank you, Chair. So starting on page 133, this report details the unaudited financial statements relating to the financial year 23-24. The recommendation is that the committee review and consider the unaudited financial statements, including the annual governance statement, in line with best practices as part of its governance role. The financial statements sets out the council's income and expenditure for the year and its financial position as at 31st of March 24. These statements were produced by the statutory deadline of the 31st of May and have been prepared in accordance with SITFA's Code of Practice and the council's accounting policies, which were brought to the committee for consideration in March. The external audit is due to commence on the 29th of July by KPMG, and this is the first year of the new contract. Turning the page to 134. I appreciate the financial statements are a large document, and paragraph 2.5 and 2.6 of the covering report highlight the key movements from the prior year. I'll take you through the core areas of the statements in more detail now. If you could turn to page 141, the narrative report. The purpose of the narrative report is to give context to the overall position of the authority to the reader of the accounts. The financial performance, starting on page 148, shows the general fund outturn position, where the council delivered under budget of 458,000. The capital outturn and reserve information subsequently follows on the next pages. The outturn report will be presented in detail at Cabinet in due course. Turning to page 154, the comprehensive income and expenditure statement. There are 4 primary statements together with disclosure notes. The first primary statement is the comprehensive income and expenditure statement. This shows the accounting cost in the year of providing services in accordance with generally accepted accounting practices, rather than the amount to be funded from taxation. For example, accounting adjustments including depreciation, revaluation adjustments, and pension adjustments. The significant movements include the Strategic Project Directorate, net income of 8.687 million, relating to Towns Funds projects that have been taken to the balance sheet and will be drawn down to fund future years' expenditure. Financing and investment income and expenditure net income of 7.614 million. of which 6.4 million of this relates to the premature repayment of the PWLB borrowing. The discount received will be credited to the general fund balance in accordance with the statutory arrangement for spreading the benefit to the council tax. Taxation and non-specific grant income and expenditure net income of 15.025 million, of which 3.2 million of this relates to capital grants and contributions. Those are the large movements within the prior year to this year, apologies. Turning to page 155 is the movement in reserve statement. This statement shows the council's reserve movement from the start of the year to the end, analysed into usable reserves and unusable reserves. This reverses the technical accounting adjustments in the comprehensive income and expenditure statement to arrive at the general fund outturn position, effectively the amount charged to taxpayers. The increase in the capital grants unapplied reserve, again, is due to Towns Fund projects where grants and contributions have been received and the council has yet to incur the expenditure. Moving on to the balance sheet on page 157. The balance sheet shows the value as at the 31st of March 24 of the assets and liabilities recognised by the council. The movement from the prior year represents the increase in the net worth of the council. These significant movements include the short-term investments, increased by 9.5 million due to investments of those grants received not yet applied to fund expenditure. These short-term creditors, again, 9.6 million increase due to unspent grants to be returned if not met within the conditions. And finally, the long-term borrowing has decreased by 15.449 million due to the debt redemption of the PWLB loans. The remaining balance relates to State Street. Finally, the last core statement on page 158 is the cash flow statement. The cash flow statement shows the changes in cash and cash equivalents of the council during the reporting period, analysed by operating activities, investing activities and financing activities. The remainder of the document is supporting notes where the format and content is prescribed by the code. I won't go through these in details now, but happy to take any questions. Thank you.
Thank you, Nicole. Are there any questions from anybody around the table on the committee? I got your name, sorry.
Mountain.
Mountain. I'm having one of those funny moments at the moment.
Isn't it?
Over to you.
Thank you very much. On page 144, I know there's a change in the political structure through, but the table shows us 2 independents on there rather than 7 2020. Is that looking back because the majority of it was 2 independents and 5 2020 independents, or?
I don't have the exact detail to hand, but I can get that further analysis for you.
Okay, thank you.
Again, this is looking at the financial year just gone, so from the 1st of April 23 to the 31st of March 24.
Any other questions? Councillor Cantwell.
Yeah, I'd like to ask Christine on page 148. There is a variance for economic growth, and I was just hoping we could get a bit of detail about that.
You need to bear in mind this is the statement, not the report that's going to Cabinet in respect of variances. So there could be things going through here that are accounting transactions. I'm not aware of variance of that size in the outturn report, so there'll be some underlying accounting that's causing that. So things like depreciation of assets or other adjustments feeding through. So I'll ask the team to go away and have a look at that.
Thank you very much.
Any other questions from any councillors on the table? Okay, so can we take that as noted then from the committee here for the report? Item 7, yes. Thank you, Nicole, for that. It's very kind of you. Well done. We'll move on to item 8. That's a combined assurance status report. And is that John? Is that you?
It is, Chair. Thank you very much.
239, sorry, page 239 we're on. It's item 8 on the agenda. Gone over to you.
Thank you very much. So the report before you is the council's combined assurance report. This is an annual report that comes to the Audit and Governance Committee for your review. The assurance process that we go through as a council is set out on page 245 of your agenda pack. And you can see there that the way the process works is it looks at assurance from operational and strategic managers for each service area. It looks at what assurance we have from corporate services and third parties and any sort of third party inspections that we've had. And it also looks at internal audit and any internal audit reports or assurances that we've had at the year. And that's our combined assurance model that we use for each of the services. This work has been, I must pay credit to Matt's team, internal audit has been supported by them, who members of his team who work with all the services to look at all of the critical activities. And the outcome of that is that you get a RAG rating of all of the critical activities in the organisation. So this is very much an oversight of all of the activities and services that the council provides. What you can also see on page 245 is an overall assurance rating for those categories, which are then broken down later on in the report. And you can see they're RAG rated with overall assurance levels of either red, amber or green. And you can see on this report the percentage changes from the previous financial year to this financial year. So there are a reduction in overall red RAG rated assurance levels, a slight reduction in the amber and a slight increase in the green, which is obviously a positive direction of travel for the organisation. The report then goes on to break those assurance levels down into further detail. There's also a section on strategic risks, which I won't go through because we've been through the strategic risk register earlier on this evening, Chair. Page 249 gives you the breakdown from the Deputy Chief Exec Communities Directorate. And again, you can see their critical activities and some commentary from the Deputy Chief Exec. And then that model, that presentation is replicated in the next section. So page 250 gives you the Deputy Chief Exec for Corporate Development and all of the critical activities in that directorate. Page 251, the Deputy Chief Exec for Programme Delivery. So that's your Towns Fund Delivery, and CIRO, which is the Senior Information Risk Officer. And then page 252 is the Deputy Chief Executive Growth and the breakdown of their activities. There's then further sections on strategic partnership working. So this picks up a lot of the work which is delivered in partnership, particularly those services delivered by public sector partnership services. Page 254 then looks at key projects across the organisation. Page 255 are key partnerships. And then final section of the report looks at, on page 257, the emerging risks for the following financial year that have been identified throughout this process. So the way this report is pulled together is very much giving that overview across all of the organisation. It's used by colleagues in internal audit to help map out the internal audit plan for the following year, and it's used by senior management to get that assurance level across the organisation and be able to dip further into key messages that are coming through the report. I've nothing further to add, Chairman, but quite happy to try and answer any questions members have got on the report.
Well, I'll stop the ball rolling with some questions. So do I take it the overall assurances, the management, the corporate, the third party and the internal all rolled into one to get those numbers at the bottom? Is that how it works?
So the evidence is taken from all of those sources,
right,
and then that's presented to SLT, and that's they review the report and agree the final assurance ratings.
Okay. And the other thing is, I would be very helpful. We've got all these different chief executives, deputies of communities and growth, and that would be a good idea if we have some names attached to these so we know who's responsible for these areas. Is it possible in future?
Yeah, that's absolutely possible.
It would be very helpful because I don't know half these people are. And the other thing is, you know, who's responsible for the key projects, who's responsible for the key partnership. I'd like to see who the account holder is so we can see what we're talking about, which person's responsible for all these different parts of it. If it'd be useful, if you could.
Yeah, I'm sure presentationally wise, we can work with Matt and his team next year to look at how we incorporate that into the report to give you that.
Is that going to be a problem at all for anybody to give us some names of some people? Look, so it'd be nice to know the names. Titles are all right, but I'd like to put a name to a face. You know what I mean? So I can see who we're talking, you know, who's responsible for different areas. Are there any questions from anybody else? Yes, of course you can. Jump in.
Just to assure you, they're all on the payroll.
No.
Now, just go to the key message. They're on the payroll.
Come on.
Just to go on the key messages, which is at page 248. I want to go to internal communications. And it's on high. It looks worrying. I mean, what's wrong with our internal communications? I mean, we should have all the tools and everything, you know, to help us probably to have a good communication and good understanding of what we do and work in harmony to provide us, I think, and with the good information. Is there any answer to that?
Do you want to comment on that, John?
I probably have to refer back to your risk register because that's directly taken from the risk register earlier. So I can have a quick look for that, or I can report it back outside of the meeting.
I think the best thing to do is come back to us on that one. I find that quite poor to see that that's very high in communication when an organisation like this should be spot on with its communication, especially the amount of things that's going on. But anyway, can you come back to that one at another time, next meeting? Is that possible?
Yeah, absolutely, Chairman.
And then we want to do Councillor Cantwell, and then
No.
was it you? Well,
Nobody want to talk.
Did anybody else want to raise any other questions? Councillor Gleeson.
So on the overall assurance, we have the previous relationship in the previous year, but we don't have that for the other one. So we can't see how they have improved or not. And I've just got me one question. Obviously, we've got red down from 3 to 0, but we still do have a red in one of the charts. So, you know, how is that amortized to 0?
Yep.
I do agree with you about the comparisons. I think we need to know what we're looking at compared to what we're looking at the time before.
Yes.
So, do you want to speak, John?
Yeah, absolutely. We can look at comparisons. Obviously, we've done that in the overall assurance. We can do that again for the breakdown. And I did ask that same question when the report came through about why we've got 0 and why we've got 1 in the other area. It's a rounding matter in a sense. So due to the number of critical activities, but again, yeah, that's the reason why it's shown in 0 and 1 and 2%. I think it is in the other section of the report.
Anybody else? I must say it's very thorough and very detailed. It's just there's a lot of explanation with it all, which I think is very good. And I read it all. I didn't know who I was reading about that and who's responsible for it. That was all where I came from. So, you know, thank you very much for that. So take it as read. Everybody happy? Right, we'll move on. Thank you, John. Well, next to number 9 now. Are we on the
program?
The work programme. Can I ask, are there any other, well, first of all, can I ask the committee to consider the work programme? And is there anybody else want to add anything to it or suggest anything that we could add to the work programme?
Just the names, probably.
Christine, do you want to mention anything? Pensions?
I think I could comment that it's actually quite a fulsome programme at the moment. So I think we've got quite a lot there to be considering. We're also looking to get a fund manager meeting in due course as well. And we are looking at pensions training as well.
Okay, Councillor Cantwell.
The only thing that comes to mind, and I forgot to mention it when we were doing the minutes earlier, is there was 12 pages of minutes and there are 4 actions I found in there that officers and people were kind of going back to us with. So I'm just wondering if it's possible to add onto the agenda actions from last meeting, because it seems we're not getting the actions back unless some of us remember to chase. And if you're in a 2.5-hour meeting, then it might get a bit lost.
Is it not anywhere in the reports anywhere where people have come back on these things at all? No.
I can see that Councillor Mountain asked a question in the minutes about culture, and someone was going to come back to him. I did note him down actually. There was also yep. So page 4 of the minutes, second to last paragraph. There was a review mentioned. The last in the last sentence. There's a culture point on page 6, which Councillor Mountain raised. There were ICT risks, which were to be looked at. And then there was page 10 on bank reconciliation. I just think it would be good if we've raised particular issues in a certain meeting, that officers could come back to us with certain actions or just a small summary of what they found.
Well, I'm going to ask Amanda to make a note. So you just, before you go, just see Amanda's with the ones that you've highlighted there, to make a note on these minutes of these meetings so that we have got a list of outstanding action points, because I think you're quite right. It's no use just discussing things and asking for things to be brought back to the table and they don't go anywhere. We want answers, and that's what we're here for. So, from now on going forward, we will keep a little section of outstanding action points and hopefully bring them to the next meeting so that people can come with the answers. And that way we're all up to date with it all. Everybody happy with that? Good. So the work programme, as Christine said, it's very wholesome, very big, and plenty to keep us going and get our teeth into. I'd like to thank you all for coming today to the meeting. Thank you for your reports. If I could just remind you next time, if we have a little overview sheet with all the bullet points, the key things on, we can look at that first and we can read all the heavy stuff afterwards. So after saying that, thank you very much for turning up today. Thank you very much for your input. Thank all the committee for all their questions, all the officers and all our auditors and everybody else for turning up and presenting the reports. Thank you. Have a good evening. Let's have a safe journey home. I'll see you again soon. Thank you. Bye-bye.